Nothing. Okay, I'm gonna say welcome everybody. We're gonna check out some things. It's been a beautiful evening. Welcome to 963B4U TV on YouTube and Spotify, coming from you live today. And for all you party people out there that have a telephone that want to call, I want to advise you. I'm giving you the number loud and clear. Please have it out. 667-770-1389. Press 7488-994. Again, that's if you want to speak or be heard. So, again, I want to welcome you to be part of our show and the call into 963B for you tonight at 667-770-1389. Press 7488-994. So, my guest tonight is a good friend of mine. We developed a relationship. We've known each other, wow, over a year and been through some journeys. So, when I say I got an expert, I got an expert of the beautiful kind. So, I want to welcome my guest, and without further ado, so let's do this. Let's do this. I'm turning my live music down. That's for the people when you come in, you'll be able to speak live. So I'm gonna come to the stage. Come on, come on, come on. Media, media. I don't see myself. Oh, y'all know me. Y'all know me. I laugh and I have fun. I'm about fun. If I'm not, you don't want me on the other side. Then we just gonna say that. So I'm gonna bring my friend Jose to the stage. So,
Hey, Miss Ariel.
got it. All right.
Cool, love
Okay,
it, love it.
welcome. Now let me know if you can see the. I have a teleprompter with all the questions. So let me know if you can see that. I don't know if you can see that
Don't
or not.
see that. Where would I find that?
It would be where notes are.
Notes, comments. No, I don't see it.
Oh, well,
Anyway,
good thing that I gave you. So
yeah,
come and
you
prepare.
gave me. Thank you so much. You know, it's funny as I do so many of these presentations, and people say, "Oh my God, you're so good at this." I say, "You know what? You don't understand. I don't sleep for 2, 3 days before coming on and doing something like this. I get really nervous, so I'm really nervous right now."
No, don't be nervous. Don't be
No,
nervous.
well, you know what? It makes it easier that we're gonna sit here and have a conversation like we've done many times over the last year. It's been a year, right? Through your home ownership journey, and I was grateful to be a part of that. Even though we didn't get to end up closing it together, I'm glad you finally got your house. And.
We gonna work a little something.
Oh yeah, well, I mean, there's always the next
I'm
one.
gonna throw a little questions at you about
Okay,
some things just to
okay,
help me out. So
all right.
tell people where you're from.
So I was born and raised on the island of Guam, which is in the Marianas. You've been there. Small little 32 mile long island. So um,
Just don't
that's
say it
that's
like that. Don't say
yeah.
it like
Well,
that.
it's a small little island, beautiful place to be. Just you know, not there currently, but that's where I'm from.
Yeah, but what part of Guam? Guam is so big. Are you from the
So I was
north,
I so
central?
I grew up kind of in the central, which is Chalapago. So
Okay,
that's right smack in the middle for
that's yeah. I
er-
know it.
it's subjective, but I'll tell you, we're right smack in the middle.
That's true. That's true.
30 minutes each way, okay? From the tip to where we're at. So northern tip to southern tip, I'm 30 minutes away. I'm right smack in the middle.
Let's see, that's Barragata and Mangalao. Two,
Yeah.
right? Barragata
Yeah.
and then
Barragata, Manila, and then Chalampago.
okay, got you.
But
Got
you got to remember, Route 4 runs right through Chalampago. So,
I know. That's what I
yeah.
said, you know.
Yeah.
Well, you guys don't know, but I know.
Not a lot of people would know, but yeah, you would know.
uh, so I will tell, you from there. Tell people how we met.
Okay, so we met through a realtor associate that we both kind of knew. Um, you were looking for a house on Guam.
Mhm.
She was looking for a lender that could help her with her, help you and help her with the VA, buying a house with the VA program. So that's essentially how we met. We got to talking. um there was a couple of houses you were looking at, all these different things and all these questions about what you could and could not buy with the VA. So I think that's kind of how we developed our relationship is, you had questions and you needed answers. On the lending side, I was there for you, and then you also had questions on the other side, which unfortunately there's some questions I could answer and some I couldn't because I'm not a real estate agent. But ask me about the loan and the programs and what they would allow, I could do that. But every state, every territory has different rules, different regulations as far as real estate goes. So on the lending side, absolutely, I got you, because for the most part it's more of the same. On the real estate side, everywhere you go. I mean, and we had journeys from Guam, and then we went to Nevada, and then you went off to Florida. But yeah, and as well as I do, every state we went to, and then we had conversations. They were a little bit different. Again, because I'm not licensed in Florida, I wasn't able to help you as much. I'm not really familiar with the market or some of the real estate laws there. But like I said, for as far as programs go, it's more of the same. We all follow kind of the same rules and regulations and guides, right? It's more state specific stuff when it comes to the real estate side of things.
So tell me how you got started into lending.
How I got started into lending. Well, funny story is, at one point in my life, I was a first time home buyer, right? Like, we all want to be. So I was I was in my 20s. I think I was like 24.
Okay.
And I was 24 and I thought I knew it all, right? Uh, they like, oh yeah, I got a pretty decent. So I was working at a title company as an escrow officer. This was in 2007. So I was on another side of the real estate world, right? So you got your lenders, you got your real estate agents, then you got the title company. They're the ones that handle all the paperwork and all of that. So I was an escrow officer for about a year at that point, and I was like, oh yeah, I'm young. I got a pretty good job. I'm doing closing real estate transactions. Why don't I have my own real estate, right? So I said, okay, let me look into what my options are, right? So I had just gotten married, and so I was looking to either buy a house or build a house or something like that. So I went through the process, right? So pre-approval, pre-qualification. I didn't know what any of it meant. Um, I ended up building a house on a property that I acquired from my mom. And the process I thought was, oh, okay, yeah, no problem, good to go. And then when we were finally closed, I was like, wait a minute, what do you mean I'm short? You know what I mean? Like, oh yeah, I'm short. You're short 60 grand. Like, what do you mean I'm short 60 grand? What do And I did what most of us do, right? You talk to your loan officer, they say, oh yeah, don't worry, sign here, sign there, and my mistake was I treated it like a car loan, like, oh yeah, just sign here, sign there, and the car's mine, just sign here, and the house is mine, just make my payments. But it was a little bit different, actually a lot different, right? And at the end of it all, I had a 200, my wife and I had built a $200,000 home on our property, and we were short 60 grand. and we needed to pay the contractor an additional 60 grand, and I didn't know where to find it. So I had to kind of go and get secondary financing with one of those, what they would call, what I now know as predatory lenders, right? Because they'll do whatever, but of course your interest rate's higher, right? So I was paying $1,200 a month on a $200,000 mortgage, and then $1,100 a month on a $60,000 second mortgage. So I was paying $2,000 a month because what I thought or was told was, oh, this is going to happen and that's going to happen. And this is going to, when we're all said and done, when the house is done, then didn't happen. Right. But the downside of it is I built on my property, so I couldn't just walk away. Right. So buyers, when you're buying a house, it's like, all right, you know what? I don't want it anymore. Like, I can't afford that. I'm not doing it. This was, house is done. It's on my property. I can't just walk away from it, right? So for the first 10 years of my home ownership, and this is back in 2007, right? So I was paying about 11 to 2,300 a month for a $220,000 house. Yeah, so it was pretty rough. So that actually sparked my interest for wanting to come into the lending side and see what did I do wrong, or what was I not told that put me in this predicament. You know what I mean? Why was it that I had to scramble at the end to find $60,000? You know what I mean? And again, I was 24, 25, 23, 24 years old, and I didn't have $60,000 lying anywhere. You know what I mean? So I had to, of course, borrow it, and that's my story. So after that moment, it was like, you know what? I tried. Like, I was applying at the banks. Like, oh, okay, I want to be. I even tried to become a teller just so I could get and build myself to become a loan officer. I finally got the opportunity in 2017 with a bank in Guam called ANZ Bank, which was basically a Australia New Zealand bank. So that's where I got my first shot. Learned about mortgage, learned about all of these things, and so one thing that I told myself is, okay, what I want to do is I want to educate my borrowers, not just close loans, but educate my borrowers, because for 10 years of my home ownership, I was looking at the bank, and every time I made the payment, I was looking at myself like, what the hell did I do? You know what I mean? Like, why am I paying $2,000 a month, $2,300 a month? Like, and back then I was only making what, $16, $17 a month, an hour. So the math didn't add up for me. You know what I mean? So there was a lot of, like, it was 10 years of self-reflection, wondering, how do I do this? How did I get myself into this? And when I got to where I became part of the lending side, I was like, okay, let me understand, and my purpose as a loan officer, a loan originator, or whatever you want to call us, let my purpose be to educate borrowers, right? So when I talk to people, I don't talk about interest rate. I talk about monthly payment and decisions. You know what I mean? Because interest rates are subjective, right? It goes up, it goes down. Those things are going to change. Let's talk about monthly payment, what you can afford, and how is it going to be for the next 30 years, right? Most people don't keep their loans these days for 30 years, but what is it going to be now? Can you afford it now? You know what I mean? So that's my story. That's what got me into lending, and that's what keeps me in lending, is knowing that I go out and now I have the ability to educate people. I mean, I may not be able to educate everybody, but whoever I can and whoever my customers are walk away knowing what they got themselves into, and they're not going to kick themselves for the next 5, 10, 15, 20 years saying, what the hell did Jose get me into? You know what I mean? And I try to make them understand, at the end of the day, when all is said and done, your loan officer is gone, your realtor is gone, it's you and your monthly payment. I learned that the hard way.
I got you. I got you. So you said you went to Australia and you
Well,
went.
no. I worked for a bank from Australia. It was called Australia New Zealand. Yeah. So it was in Guam. So same mortgage guidelines, U.S. guidelines, and everything like that. But yeah, so I kind of learned a lot there, and like I said, I use that as a tool to help me, educate my buyers and the programs that are out there. Just because you qualify, um, doesn't mean that's the best thing for you. You know what I mean? You got to look at all the programs there are, all the things that are out there, and kind of decide what makes more sense. You know what I mean? And so, and what I found out is, I mean, like I said, I learned so much, right? Every lender offers different things, right? Some lenders, like all the lenders could offer VA, right? But then do they offer a VA renovation loan, right? Which we offer, right? And it's all based on what the lender wants to basically partake in. Are they, in Guam, I was one of the only loan officers that was offering USDA loans, right? And a lot of banks, so a lot of banks do have the opportunity to do it. Some of them even have the program, but they don't push it because it's a lot more work than a regular conventional loan or a regular VA loan or an FHA loan, right? Well, the FHA loans and the USDA loans are a lot more work. USDA, you actually have to go through two approvals. You have to go through the bank approval, and then when you're done, you send it to USDA for their approval before you can close the loan, right? So for some loan originators, and then also some agents, real estate agents, are like, oh my God, USDA, you got to send it there. It's going to take too long. And there was a stigma of like, oh, this is going to take 60, 90, even 120 days for a USDA loan. And I was closing them when I was with ANZ Bank. I was closing them in like 45 to 60 days because I was constantly on it. Like I was making sure that loan didn't miss a step. You know what I mean? So that all that hard work that we did, it'll get there, it'll get approved, it'll come back, and we'll get it closed, right? And then when I left there, I moved to a company called Norcom. And with the efficiencies that we had, now like with Total Mortgage, everything was more automated. So I was able to close those loans even faster at like 30 to 40 days, right? Which used to take, honestly, when I first started doing USDA loans, they would take 3 to 6 months. But then I kind of figured out, okay, what do we need to do? How do we need to do it? So I can close a USDA loan just as fast as I can close a conventional loan now. Right. So, I go out and I educate myself so that I can be a resource for the borrower, not just a loan officer. Like I want to be able to answer your questions. I want to say, hey, what about this program? What about that program? Well, we could do it, but you got this, and this versus this, that, and that. You know what I mean? Like, yeah, right. Like, every program, and it's funny is every program has its own niche, right? And then you have down payment assistance programs, which are different from state to state. And then you try to mingle those programs. And sometimes when you put them together, they're not necessarily better. You know what I mean? So, like I remember one house that you were looking at, you said, hey, Jose, it's this much. Can I use the down payment assistance? I say, yeah, but here's the problem. You're qualifying for this much on VA. I think it was like, what, 400K. But VA allows like 50 to 60% DTI, depending on your good credit, right? If you got good credit, we might be able to get you to 60%. The down payment assistance only gets you up to 50% DTI. So if I take that down payment assistance and I add that payment, I'm going to have to bring your VA qualification down to like 3 something to add that. And it's, but you could get the full 400 on VA. But if I add that down payment, which is 20, 30 grand, which is $100 a month, maybe, because they only allow 50%, I can only give you like 300,000 to get you at that 50%. Right. So sometimes down payment assistance is good. Sometimes it's not. It's all just kind of what I tell borrowers is everything is situational. And it depends on the borrower and their situation. There's no program, there's no one size fits all, right? Some people say, oh, I did this and I did that. Well, yeah, you could do that because your situation granted for that, but somebody else's situation might not be the same. You know what I mean? So you really kind of got to double back and say, well, why did he do it and why can't I? Because everybody's situation is different. You know, some people, like I said, and with the VA, because
Uh-oh. You froze for a minute.
100%. The only thing is, or closing cost assistance. But when you add those things in, which a lot of times the government programs they bring down, like the state programs, their DTIs are a lot lower than allowable on the VA, Freddie Mac, Fannie Mae side. So it's finding that sweet spot, I would say. So and a lot of that is taking the time to actually look. Like I could sit down here and do pre-approvals all day. I could probably do maybe 50 to 100 pre-approvals in a day, but it takes me about an hour or two per person because I look at USDA, I look at VA. I mean, well, not if they're not veterans, I don't look at VA, but then I look at FHA, then I look at conventional, and I say, okay, where does the credit score fall? Where does and I look at those three, or depending, like I said, depending on the customer, if they're VA eligible, 9 times out of 10, I know we're going to go VA, but I look at it anyway. You know what I mean? Just to see, you know what I'm saying? There might be something different that makes it, makes it better for them or makes it worse for them or whatnot. Right. So I look at all the programs, even though I know in my heart, we're going to go with this. I look at it just in case, you know what I'm saying?
So I have a question about
Okay.
the VA.
Uh-huh.
On Guam. We're gonna focus on Guam right now because of the VA, the trouble we had on Guam with the VA. What was it? The renovational
Oh,
loan.
VA renovation loans. Yes.
Yeah. Explain about that and explain why some people might be experiencing what they're experiencing on Guam.
Okay, so what's funny is a realtor asked me that same question about well, not so much the VA but the FHA. So there are renovation loans that are out there, right? A lot of them with all the different programs. So you have conventional renovation loans, you have VA renovation loans, you have FHA renovation loans, right? And with the VA renovation loans, from what I know and the programs that we offer, there is a cap of 50K, right? But in order to use the VA renovation loan, we need to have a HUD consultant, somebody that's been approved by HUD. And there is a list on HUD.gov. Currently on Guam, there's only one person that's on that approved listing. Okay. Unfortunately, and I did a bunch of renovation loans in Guam. And at a certain point, there was a change where HUD or FHA and VA wanted a certain type of inspection. It was called a 21-point inspection. Basically, that would need him to change his whole format. And he was like, you know what, I'm not doing it. And you know what? I think he was on the verge of retirement already because he's kind of up there. He's the only one. I'm not even sure if he's still, if he's still doing business. I don't think so. But yeah, he's the only HUD consultant. Like out here in Nevada and in California, where I'm also licensed, there's a bunch of HUD consultants. So we can use those programs because there are HUD consultants, right? Guam is very unique because not a lot of people, I don't know if it's lack of knowledge or lack of, but if we had those things, if we had the HUD consultant, we would be able to offer the renovation loan. So like right now, the only renovation loan I can offer is the FHA, which is an FHA. It's called a 203K, which is 203K limited, right? 203K means absolutely nothing when it comes to the numbers. It's just the name of the program. I think it references the law or the paragraph or whatever where it authorized the renovation loans or whatnot. But essentially, we can do that right now without a HUD consultant, but it limits it to 75,000, right? And it's non-structural renovations, right? So you can change your windows, you can change your tiles, you can paint your house, you can do all of that stuff, but you can't add a room because that's structural. You can't put a second floor. You can't do, you can't extend the house. Anything structural, we can't do, right? Because we don't have that HUD consultant. But I mean, it's still a good program. You can do appliances, you can do repairs, renovations, whether cosmetic or whatnot. It just has to make sense, right? And it has to kind of add some value to it. So that's the challenge we have on Guam right now with those renovation loans is, yes, we can do them, but currently only the FHA 203K limited, meaning we can only go up to 75K, and it's non-structural. If we had a HUD consultant, because I did some before Santi retired, I would say, I'm going to say he retired. Okay. But before that, I had one where we had a VA renovation loan, brand new house. The borrower took, I think, 40K and added another bathroom. So he had 2 master suites. So he did, so it was a $600,000 home. He added another 30 or 40K. I don't remember the number. And so now he had 2 master suites, right? We had one, I just did one FHA one a couple months ago. I think that was back in November. They did they did appliances, right? So the property appraised low, but the seller was like, okay, I'll still sell it to you. It appraised for 400. I'll sell it to you for 410. So the borrower was like, man, we have the extra 10,000, but now we don't have money for appliances. We don't have money for, so we were able to up the loan to 410, or no, I think we went up to 419. They got a new washer, new dryer. They installed a new stove. I think one of those microwaves, built-in microwave type. They basically kind of renovated the kitchen. Got a dishwasher in there, a water softener, all of those things, and we were able to finance that, even though the appraisal came in lower than we needed to. So sellers happy, they got their 410. Buyers happy because yes, they paid 10,000 over the purchase price, but we were able to finance those appliances and those renovations. Water softener, dishwasher. I mean, dishwasher is a new thing on Guam, right? Not a lot of people have dishwashers in the older houses, but yeah. You know what? So like I live in Nevada now. We use our dishwasher as like a dish rack. We wash the dishes and we put them in there, right? So we didn't grow up with it. So you know what I mean? Like, I know some of the newer houses have them, some don't. But it's starting to become a trend, and I'm pretty sure it's going to be the standard pretty soon. But again, it's funny every time I come out here to this, like when I'm here and I go to somebody's house, right? Somebody from Guam, I'm like, hey, do you use your dishwasher? And you can kind of tell how long they've been in the States by whether or not they use their dishwasher. Right? So if they've been here a long time, they use the dishwasher. If they haven't, then it's like 10 years or less, they're using it as, like me, as a dish rack.
Storage.
Yeah, storage, right? Wash the dishes, throw it in there. Sometimes, the first time I vacationed out here, I went to my brother's house in Sacramento. And so I was cooking, right? Like my brother was like, hey, can you cook this? Or my goddaughter was like, can you cook this? Can you cook this? Can you cook that? And then like after like the second or third day, I'm like, where's that pan I used? Where's that pot I used? Like, how come I can't find any of the dishes? And I completely forgot about the dishwasher, right? So like I'm looking in all the cabinets, I'm looking in the pantry closet. And my brother comes home from, I was like, bro, what the hell do you guys do with the pots and pans? He goes, you check the dishwasher? I was like, no. And I opened the dishwasher. I was like, oh, there's all the forks, the spoons, the pots, the pans. Everything was in the dishwasher. I was like, oh, shoot. But again, he uses it as a storage, basically. Like they wash it, put it in the, because the dish rack's not big enough. So, they put it all in there. And then I was like, yeah, I couldn't find spoons. I was like, are they throwing it away? Did I make them mad? Did I ruin the pot? They threw that sucker away, But no, they put it in the dishwasher. But yeah, like I said, the renovation programs are great because, and especially out here where we have more options, like you could buy a fixer upper. Like a lot of times you find the right house but or well, the house is in the right neighborhood. It's the right size, but you don't like the kitchen, you don't like the bathroom, or there's just some things that's just not right about it. And with those renovation loans, you can make it right. You know what I mean? Um, so yeah, it's a very good program. I always offer it. Anytime I talk about it, people, especially a lot of realtors, they get nervous. They're like, well, but what about this? Well, we close it and then they do the renovations after, so we're not going to worry about that. you know it's just finding that house that they want to renovate. You know what I mean? Or going and finding, like, there was a house that my uncle was telling me about, like right next door to him. He was like, dude, all the houses are selling for 500. That one's only selling for 375. I was like, why? He goes, well, the last tenant like just completely messed it up. Like, I said, well, if you buy it, you could probably buy it for 375, put 50 to 75K in it, and get it back to where it needs to be. And you got a $450,000 house for what's going for 550, 600. You know what I mean? He didn't take my advice. He ended up buying somewhere else, but yeah,
Okay, that happens sometimes.
it happens,
People don't always, the family don't always listen to you
Yeah.
know the ones they love because
Yeah.
they
No, I
like
got you. I
you my
got you.
family, so why am I listening to you? You know, you know what I mean?
Yeah. Yeah. Well, especially when it's coming from your nephew, right? You're like, whatever. You're the
Exactly.
nephew. Yeah. You're my nephew. You don't know nothing, but yeah.
Okay. I want to talk about the different types of lenders. We was talking about lenders and broker lenders. What's the difference between a broker lender and I don't know, like total mortgage lenders? Like what is the
Okay, so you're a mortgage broker and a direct lender. Okay. Yeah. Well, let me just say this. In general, bank, credit union, mortgage broker, and a mortgage company. Okay, that's what you're going to see out there, right? We offer the same things that the banks offer. Okay, we're all offering the same loans, the same programs. The only difference, of course, is interest rates. Okay, now I'm gonna go in general, and then I'm gonna kind of go break it down. Banks, credit unions, mortgage brokers, and mortgage lenders. The difference between the mortgage brokers and mortgage companies and the banks and the credit unions is we're non-depository. We're not going to offer you checking accounts, savings accounts, Christmas club, credit cards, and all of that stuff. Okay. Mortgage brokers, mortgage companies, all we do is strictly mortgage. We're not going to offer you a personal loan. We're not going to offer you an auto loan. We're not going to offer you a Christmas club account. We're non-depository. Okay. So credit unions and banks fall under FDIC or NCUA respectively, right? Mortgage brokers and mortgage companies, because we don't do deposits, we're not insured by FDIC or NCUA because we don't do deposits. So we're state licensed. Okay. That's the difference between banks, credit unions, mortgage companies, and mortgage brokers. Now, when it comes to mortgage brokers and mortgage companies, it's direct versus indirect, right? When you're a mortgage broker, you basically have associations or affiliations with different lenders, and you kind of find the best deal and maybe whichever is going to pay you the best commission or whatnot, right? So you're shopping based on two things: who's going to pay me, and what's the best for my customer. Okay. Which, is one way to do it, right? Or there's the mortgage company where, for most of our stuff, I want to say all of the regular stuff, right? Your conventional, your VA, FHA, USDA, we're going to finance it directly, right? When we have some of those different types of loans like bank statement loans or DSCR loans and all of that stuff, those we usually broker out to those companies that specialize it, right? So the main difference is, so if you went to ABCDEFG broker, okay, when you get to the closing table, it's going to be a different lender at the closing table. because somebody's going to come in and finance it for you for that broker. When you deal with Total Mortgage as a mortgage company, everything is Total Mortgage all the way to the end. Okay, so when you close your loan, you close your loan with Total Mortgage. Total Mortgage is your lender, not ABCDEFG gave it to Bank of America. Now Bank of America is your lender. Now, for me, the biggest difference is always on the back end, right? If you close a loan with me at Total Mortgage, you say, hey, Jose, I'm having some issues with my Total Mortgage stuff. I can get on the horn with people in our office and say, hey, can you look at Miss Ariel's loan? What's going on? I don't have direct access because that's on the servicing side and I don't do the servicing. But we do transfer to a third party that does the servicing, which we have an affiliation with. I can say, hey, what's going on with this? Can you help us out? When it comes to the broker side, I don't know, and because I've never been, I don't know if they have that same access to say, hey, because we have somebody in our office that works with those third parties and says, hey, what's up with this loan? What's up with that loan? Hey, give me the mortgage statement. So we still have access. The mortgage broker might just say, hey, you got to call bank of whatever. Yeah, you got to call them. They'll be able to help you out. You know what I mean? They won't have that same, ability. Like I have issues with customer payments. I jump on an email to our servicing team. I say, hey, here's our loan number. Can we find out what's going on with this? They work with the servicer to figure it out, and then they get back to me. You know what I mean? And then I'll send the customer the email and say, hey, here's what's going on. Or I'll send an email and I'll copy the customer so that they know what's going on. And when the reply comes in, they know what's going on. But I'm still here to kind of help them out. Sometimes it doesn't even need to go that far, right? Sometimes they say, hey, Jose, how come my payment went up? I'll say, well, send me your last statement or send me whatever document you have, and I could go over it with them. You know what I mean? Because it's coming from us. Right. When it comes to the broker might say, well, call the bank. You know what I mean? You will call this guy, call that guy, call that bank, call this bank. Whatever bank closed it, that they're gonna refer you to that person or to that entity.
I like that to that entity.
Huh?
I like that to that entity.
Yeah. Which I mean, because you don't know if it's gonna be another bank, another credit union, or another mortgage company. You know what I mean? Because the broker is gonna go where they get the best deal. Now, I don't know essentially if that's the best deal for the broker or if it's the best deal for the borrower, right? So that could come into question too. Sometimes, because a lot of times, I mean, let's face it, I'm commission based. The broker is probably commission based. He might say, okay, I'm gonna send all of this because I get a better commission split. I don't know. It all depends how it's structured. And don't get me wrong, every mortgage broker is structured a different way. So it may apply for some, it may not apply for all. So, in general, though, come on, we're human. If I'm gonna get more money there, where are we gonna go? You know what I'm saying? When we go shopping, we go where we get more bang for our buck, right? We go to Costco, we go to, so again, when they're shopping for their customer, they're shopping, with us, it's like, this is what it is. This is what we offer. And this is, um, and, a lot of people, and I'm going to tell you this, I can't close every loan, right? Every customer is not for me and I'm not for every customer, right? There's some customers that love that I'm very educational, that I'm willing to sit down and go over these documents with you. And there's some customers that are like, no, I'm good. I've done this before. So, okay, great. Some customers appreciate it, some don't. And it's just fine. But it doesn't change my goal. You know what I mean? I want to make sure, like, hey, when something goes out, when my disclosures go out, I say, hey, disclosures are out, go ahead and sign them. Let me know, and we'll schedule a time to go over them, right? We did that twice, 3 times on 5 times, 5 different transactions, right? Even though the paperwork is the same, we're going to have that discussion because for me, I tell everybody, my time is your time, right? Every customer I have is not a number, it's a name. It's a person. It's an individual. It's an individual that's going through, or a couple that's going through what I went through. And I put myself in the shoes of the customer. And I tell them, go through the documents, write down all your questions, and we're going to go through it. we're going to go through it because I don't want any, like, at the end of the day, my goal is when you sign on your house, you go home and your first payment comes and there's no question in your mind. Or you might say, you know what, there might be a question in your mind. You might have forgotten, call me and say, Jose, what was this? Oh, yeah, remember we had this discussion. Bam, 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 bam. You go, oh, yeah, that's right. Gotcha. You know what I mean? But it's not something ever that we never talked about. You know what I mean? I mean, not to say that I send out loans and then something pops up that's not supposed to be there, but we forget. You know what I mean? It's an overwhelming amount of information that comes through when you buy a house. So I don't expect my customers to remember everything.
Okay, well, I don't have to do this. Thinking of a way. I'm trying to put your information out here on a banner.
Was that?
I'm putting your information out here on a banner.
Oh,
There you go.
oh, there you go. Cool. See, you're better at this technology stuff than me. You know what I mean?
I got you. I got you.
I used to think I was cool because I knew how to send emails from my phone. Now that's not even cool no more.
You're funny.
Like
Oh,
10 years ago, they're like, you could get your email from your phone. I'm like, yeah, I can even reply. Now, like, there's so many things that I'm just like, whoa, okay.
so this is guys how you can get in contact with Jose. I'm gonna keep this up there for about 5 seconds, and then I'm put it down, but make sure that it stays up there. So you know, I always got other questions for you, and the other one which I would like that you explain. Um, which this is also educating our buyers
Hmm.
about what a good lender is and does, and explaining some of the programs because a lot of
Yeah.
people don't know about the VA. A lot of
Yeah.
people don't know about the constructional VA loans or even the conventional constructional loans or any of those, which is very, very important to have. But also explain about your education, which you do every September to be recertified, that you just don't, you know what I mean? Like the steps that you do to make sure that you're in the game.
Okay. Well, so as I said earlier, right? So there's credit unions, there's banks, there's mortgage companies, and there's mortgage brokers, right? So coming from the bank, because I worked at the bank for 10 years before I moved over to the mortgage company side, right? And I didn't realize how much different it was. Okay. So when you work at a bank, you're kind of umbrellaed, right? The bank has an NMLS number, and because you work under the bank and they're under FDIC, or you work at the credit union, you're under NCUA, you're kind of umbrellaed in there. So all you have to do is go online, go in an NMLS, request for create an account, and then your lender, your bank or your credit union says yes, he works for us. Boom, and they give you an NMLS number. Okay, which was cool. That's how I got my NMLS number, right? When I came over to the mortgage company side, they said, well, you have to take I think it's a 20-hour course. And then every year, you got to take an 8-hour refresher course. And we got to check your taxes. We got to check your credit. We got to check all of this stuff because you want to be a state license. You want to work at a mortgage company or a mortgage broker. So we get a lot more we we have to be a lot more on top of things, I would say, than those in the banks and the credit unions, right? Because they just automatically renew every year. They don't have to submit their taxes. They don't have to get their credit checked. They don't have to, because they work for the bank, they're kind of protected, right? So two things, right? Not to say, and again, everything's situational, right?
Right.
When you go to a bank or credit union, they're going to offer you what they offer you, or the loan officer is going to offer you what they know about. Okay. If they don't know, they're just going to, it's kind of mum's the word. Now, one thing I realized, so when I became a loan officer in Guam, before like I got out there and started, prospecting and all of this stuff, I actually went to a bunch of different banks and asked a bunch of different questions as a customer and found out what they offer, what they didn't offer, what they. I can't really do that here in Nevada because there's like hundreds of lenders. So doing that is just it's not practical. But I always knew and I wanted to know and I wanted to understand, and so some like I talked to my sister a couple weeks ago. She was like, before I left there, I was trying to help my friend buy a house. And I did a bunch of research and I see she qualified for USDA. But Navy Fed never said anything about USDA, right? And I said, "Did you ever ask?" And she goes, "No, but they never offered it." I was curious as to why. So I said, "Well, there's a couple of things. One, Las Vegas doesn't fall under USDA criteria. One, which is probably why they didn't mention it. Two, there's not a lot of loan officers, even out here in the States, that really know how USDA works. And I say this because in the previous company I worked with, a previous mortgage company, coming out of Guam, I closed more USDA loans than anybody else in the company. And this is like nationwide, right? Like, I mean, I think they were licensed in like 20 states, 30 states, right? But I closed more USDA loans than any of them. And so I got an award for it, right? And then afterwards, I'm talking to a bunch of these loan officers, and this is like a top producer kind of shindig, right? And I'm talking to these people that are closing 25, 30, 40 million. And they look at me and they said, "Hey, Jose, you close USDA loans?" And I'm like, "Yeah." They're like, "Really? Why?" And I'm like, "Well, because it's a great program." They're like, "Yeah, but it's so much work." Like, I mean, yeah, but at the end of the day, you're getting paid for your time. You're getting paid for your service. Why not offer what the best product you could? If I can get you zero down payment as opposed to 3%, and you're paying a small guarantee fee versus private mortgage insurance or mortgage insurance premiums, why not? You know what I mean? So it was funny that I mean that was like 6, 7 years ago. I was like, wow, you know, you say USDA loans and these stateside people are looking at me sideways, like, you do those? I'm like, why? You know what I mean? Like, why not? You like I built my business on that, you know? But back to the question though, I mean, what makes a good lender is one that's able to answer your questions. I mean, and I'm gonna tell you this, right? Um, there's questions out there that I can't answer. But my response is always, you know what? Let me look into it and I'll get back to you. Okay. There's some things that, I'm not 100% confident. There's so many guides, there's so many rules, there's so many regs, there's so many programs. So I got to make sure that I'm giving you accurate information, and if I'm going to pride myself and put my goal as educating buyers, I'm not going to give you half-ass answers or an answer just to pacify the question. That's not me. You know what I mean? I can't do it. You know what I mean? I won't be able to sleep. I'll be like, dude, was that even correct? Like, you know what I mean? Did I can't, like, seriously. So, um, I mean, what makes a good loan officer is basically one that cares about the customer. You know what I mean? There's people that have come to me and said, Jose, I've gone here, I've gone there, I've talked to this person, I talked to that person. And then we end up closing on a house and like, you know what? It wouldn't have been possible without you. And that helps me get through. You know what I mean? Like, okay, I'm not a bad person after all. You ask my daughter, I'm the worst person in the world. But you ask my customers, like, your dad's the best. It's funny. I guess that's the balance that we have to have, right? Like at home, like my son was just here for 3 weeks. He was like, Dad, you're still mean. I was like, I'm not mean. I just don't like certain things, like so it is what it is. But yeah, at the end of the day, you want a loan officer or a lender that's going to listen and understand what your needs are and kind of help you through that process. You know what I mean? Like, you know, there's ways and means. You know what I mean? There's a lot of lenders in Guam, especially that are still in the pre-qualification. Pre-qualification means absolutely nothing. Okay, it's a piece of paper. 9 times out of 10, 9.9 times out of 10, it's, and excuse my French because it pisses me off, it's a piece of shit spreadsheet that they punch in all these numbers and it says, oh yeah, you could qualify for this much. Yeah, guess what? When you come back with a purchase agreement and you went and put a deposit down, it's going to take them a week or two to say whether or not you're approved or denied. Okay. When we do a pre-approval, we do a soft check so we can kind of see what your credit score looks like, see what your debts are, and then we I don't really do an asset check. I just tell them, hey, this is what you're going to expect, right? And if you have this money, we're going to be okay. And people know that, like, if you don't have the money, don't try. I mean, you don't go to the store and not have the money to buy your groceries, right? Same thing with a house. If I tell you, hey, expect this much, and you know what? There's lenders out there that can say, oh, don't worry, you could do it with 5 grand. No, I'm never going to say that because I don't know. I don't know what house you're buying. I don't know what type of inspections you want to do. I don't know. There's things that are required from us as the lender, and there's things that aren't. Like you, for instance, you went and did a whole bunch of inspections, and you probably spent just as much on inspections as you did on everything else. You know what I mean? So you never know, right? So I always tell you, expect the worst and hope for the best. When I give you a quotation, it's going to be high, and I know it's going to be high, but if you don't flinch, then you might just be ready to buy. You know what I'm saying? Yeah, uh, I I used to be very like, oh, don't worry, yeah, we'll figure it out. No, now I'm a little bit more stern, and it was my desire to help everybody, right? But if you start flinching when we talk about down payment and closing costs, then we need to sit back and have a different conversation of, hey, let's talk about getting there first, and then we could talk about the other stuff. You know what I mean? And so every, I match all my borrowers' energy. If you give me all your docs and everything today, you're gonna have something tomorrow because you took the time. I'm going to take the time. If you applied and I say, hey, I need this and this, and you wait 3 weeks, I'm not going to make you wait 3 weeks. But there's people that jumped in front of you and put in all the effort. I'm going to put in that effort first for them. Whether you applied a week before, but you took 3 weeks to get, you know what I mean? Like it's all about effort, you know what I mean? And I dedicate a lot of time and effort to my customers. And if you're putting in 100%, I'm going to give you 120% back. You know what I mean? And if you're only giving me 50%, then I might give you 75. Not to say that I don't want to help everybody, but it's hard enough to help people, but you got to help me help you. You know what I mean? If I know it, like you, when you told me, Jose, I only got this much that I'm willing to spend. I said, okay, we're going to work with that. And this is how we can do that. You know what I mean? We got to be upfront. This process is not for the weak. It's not for the, you know what I mean? Like it, it's, you got to be kind of tough somewhere. You know what I mean? If you're going to get hurt with everything, oh my God, the toilet's a little bit crooked. Guess what? 99% of the toilets out there are a little bit crooked. You know what I mean? Like even in a brand new house. Okay. Um, I'm not saying that you got to settle for what's out there. I'm just saying that 9 times out of 10, everything with the house is not going to be perfect. Okay, that's why there's inspections. That's why there's appraisals. That's why there's all these wonderful stuff. Okay, but when the house is for you, it's for you. And when you want it enough, and like I said, we put in, and I don't want to make it sound like the mortgage process is work, because I try my best to make it not work make it as easy as possible for my borrowers. Okay. But there are some things that I have no control over, right? I have no control over your inspections. I have no control over your appraiser. I have no control over the appraisal reports. I have no, we rely on these reports and we make our determination, and we all rely on the expertise of others, right? So it's like, it's funny because everything circles around the lender. They blame the lender because, oh, it's up to the lender. No, it's really up to what is on these reports and what we're seeing, and you know what I mean, for us to make our decision, right? Um, if an appraiser says, well, you got a setback issue, your house is too close to the border, and that's against the law, I can't do anything as the lender. You know what I mean? And we're not going to finance it because we know there's a problem. You know what I mean? So it's really, like I said, everything is situational. I've had transactions that breeze through, and I have some that kind of draw out for long times because of this and that and that and this. But guess what? I'm going to sit there and be with you every step of the way, and we're going to figure it out. If you really want this house, we're going to try to figure it out. And that's what I try to do. You know what I mean? And then there's some points where we got to say, hey, this house isn't worth it. Like you gotta move on, right? Um, like the Windows house, the one that had no windows. You couldn't open the window. Like really,
Don't get me started. That was the
I
first
know,
house.
but I'm just saying. You know what I mean? Like, and as much as you wanted the house, what was it, 5 acres, right? But 5 acres, no windows. Miss Ariel, what are you gonna do with it as a fire? You can't get out.
Oh,
I mean, I like I said, there's a lot of people that love to work with me, and there's some realtors that don't like to work with me because I am 100% customer oriented. My reputation with the customer is more important than my reputation with the realtor. Um, don't get me wrong. I love my realtors to death. I love my realtor partners to death. Okay. But there are just some things that I do not budge on, right? Like if the borrower doesn't, don't call me and say, just tell them it's okay. No, it's not. I'm not going to live there. The realtor's not going to live there. Why am I going to say, oh, it's okay? It's not okay.
right.
You know what I mean? Um, there's transactions that have died because of something I said, and don't get me wrong, it wasn't something bad. It was just like, well, you got to consider this, right? Because honestly, I've been in the buyer's shoes. Okay. Again, when this is all said and done, it's you, your house, and your monthly payment. Your realtor's gone, your loan officer is gone, and it's just you. Okay. And I don't want to make it sound like a death sentence, but it was a death sentence for me. Like I had to work 2 jobs for 10 years. You know what I mean? Because like, that was that new term. The math wasn't mathing. Like I couldn't afford 2,300 a month. So, I mean, I do pre-approvals all the time. Sometimes it's like 600, 700, 800. And they're like, oh, Jose, da, 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 da. I say, you know what? I'm not going to tell you what house to buy. I'm not even going to tell your realtor how much you were pre-approved for. All I'm going to say is this is the monthly payment for 800K, 700K, 600K. Is that something that you want to pay for the next 30 years?
That's what I like.
Okay. Um, and we had that discussion, right? Like, okay, yes, Miss Ariel, you qualify for 400, 500K. But do you want to pay this amount? Yes, you can refinance, but when can you refinance? I don't know. When is the rates going to come down and your monthly payment going to drop? I don't know. We got to worry about the monthly payment now. Is that something that's affordable? Are you still going to be able to walk around and do those podcasts? Or are you going to have to go work at Walmart part time? You know what I mean? Because like you need that extra income. You know what I mean? Like, and that's what we got to understand. It's we got to look at what affordability really is, right? When we do pre-approvals, when we do these approvals and these loans, we're looking at your gross income. We don't take into account your groceries. We don't take into account your power, your water, your telephone bill, your Wi-Fi bill. cable, YouTube TV. We don't know if you like the 4K streaming stuff. Like, I don't know. You know what I mean? So those things, I mean, I don't know if you drink Starbucks once a day or 3 times a day. You know what I mean? We don't factor those things in to your pre-approval, right? So I say, affordability is in the eyes of the client, right? If you don't flinch at $4,000 a month, then hey, go for it. I shake when you say $4,000 a month. You know what I mean? Like, I'm like, oh God, $4,000 a month. But yeah, so everybody's situation is different. Every loan is situational. Okay, it's your situation and yours alone, right? You could have a twin sister that looks exactly like you and has the exact same income, but her situation might not match your situation. You want 5 acres of land, she only wants a half acre. You know what I mean? She wants to be in the city. You don't like neighbors. You never know. You know what I mean? But you got to remember, you being out in the cut, so to speak, is cheaper than being closer to the city, right? So the situation is different, right? And like some programs, like USDA, if you're out in the cut, they'll absolutely finance those things, or out in the rural areas. But if you're in the city, they don't finance those suckers. You know what I mean? So it's just, you got to kind of look at the situation, what the customer's looking at, where they want to be, and also give them different. I like to kind of educate so that they can kind of open up and say, well, maybe like. Sometimes I tell them, hey, why don't you live in Peru? It's 40 minutes away. It's cheaper. You know what I mean? And you're just a stone throw away from Vegas. Shit, some people drive 2 hours to work. What's 40 minutes? I personally don't like to drive. So I'm like, I mean, would I do it? Maybe later. But I had the discussion, honestly, with my wife. I was like, why don't we buy a house in Peru? She was like, yeah, but that's like 40 minutes away. I was like, okay. She was like, are you still gonna drop my daughter to school? I was like, never mind, we're not moving to Peru. I'm thinking like, I don't have to drive nowhere. Now you want me to drive back to Vegas to drop her to school and then back? No, never mind. We're good. We'll stay here for now. But you know what I mean? Again, and situations change over time, right? One of the biggest things that I've been telling my customers now is, don't look at your house as your forever home, right? And the reason why I say that is because I used to have that mindset, right? It's like, oh my God, this is gonna be it. This is, and that's the kind of the mentality or the culture that we had growing up, right? Is like, you buy a house, this is it. But guess what? When we look back, look at cars, right? You're not driving the same car you got when you were 18, 19 years old, are you? What did you do? Upgrade and trade, right? Or you go and buy based on what the situation is, right? So when you do that and you stay within your means, it makes it so, like, I thought of, okay, why don't I just buy a condo? Because my kids are going to leave. Well, then I thought about that. And then we had my daughter 6 years ago. My kids are 17 years apart. So I was like, oh, shit, I can't do that now. But, it's all, different situation. I even thought to myself, I was telling my wife the other day, I was like, we were going to parent for 4 decades. That's absolutely insane. You're only supposed to do it for 2 decades. You have all your kids in that 20-year span, and then you just kind of you might parent for like 18 to 25 years, depending on how far apart. We went and stretched it to 40 years. Like what are we thinking? But yeah, so like I had one customer, and I tell this story because it was so crazy. They only qualified for like 350K. And you know that, I mean, I say only 350K, but thinking about prices on Guam, 350K is not a lot. So one of my buddies had a $350,000 house, 2 bedroom, 1 bath. And it was the wife, husband, and 1 kid. And they were expecting another one. I was like, think about this. You get this house now. In about 5-10 years, when you kind of outgrow it, hopefully you don't have like 5 more kids in the next 2-3 years, but you outgrow it. The kids are getting bigger, right? you'll have enough equity to either refinance it, take that and down pay a bigger house, because I'm sure incomes would increase by then, or you sell it and use that as a down payment and get another maybe $500,000 house, but you got maybe 100 to 200 in equity where you can down pay 200 and you're paying it for the same thing. Upgrade and trade, right? That's what most people do. They take their old car, they upgrade, they trade it in and they upgrade, to get a bigger one. Or who knows? Kids are out of the house in 20 years. You say, you know what? We're going to sell this and buy a condo because we don't want to cut grass no more. I don't know. You know what I'm saying? But guess what? If you're not in the market, you're not in the game. If you're not in a house now, you're not in the game. The longer you wait, like I've had customers come back to me 2-3 years later, like, man, Jose, I should have bought 2-3 years ago. In the back of my mind, I'm like, yeah, but I don't say it out loud because I got to remember that everybody's situation is different, right? I've had customers come to me, like I had one customer, we closed in October. He bought a house 3 houses down from the first house he was going to buy 3 years ago. And it was one of those kind of development types in Guam, right? So they all look the same. But he bought it 3 years later for 40,000 more. And instead of 3%, his interest rate was at 6%. So his interest rate doubled because when he was trying to buy the house down the street, it was at 3% at 400K. He bought it at 440 at 6%. He said, Jose, I shouldn't have been a fag and just bought it. And I hate to use that word, but that was the word he used, right? He goes, I should have just bought it. And it was funny because there was I forgot what the issue was with the house. It was a very minor issue. And he bought the house down the street and the tiles were popping out. And I was like, bro, you're not going to, he was like, you know what? I made the last issue scare me away. I'm not going to make this issue scare me away. I mean, the seller ended up giving him like a seller credit to offset his closing costs so he could fix the tiles and stuff like that. But it was just like, and I told him, I said, at the end of the day, it just wasn't your time. You weren't ready. If that scared you off, you weren't ready, and you're ready now. So, the focus is the now, right? Again, should you have bought 3 years ago, you might have saved $1,000 a month, but did you? No, we can't go back. We can't cry over spilled milk. Let's just get it done, right?
Okay.
Yeah. All right.
Buy a house.
What's that?
I said I got a theory for you. You got a person that bought a house. Say,
Okay.
I got this house now. Like the house I want, but I know I want to do upgrades. You know what I mean? Like I'm looking at the upgrades. Like want to upgrade maybe the bathroom, make the bathroom bigger, make the whatever.
Yeah.
So well, there's always an outdoor kitchen.
I can't hear you, Miss Ariel. You're kind of cutting
Okay,
off. Sorry.
in Guam we have outdoor kitchens. We don't
Yes.
have like
Yeah.
we have a kitchen,
Yeah.
but we have a kitchen
Yeah.
that we could.
You have a kitchen in Guam. You have a kitchen for show, and you got a kitchen for cooking.
Right. Out there, with your family and making. So you want to maybe have an outdoor kitchen, but that is that considered outdoor the kitchen? You're gonna have to probably expand the walls. That's a structured loan, right? Is that considered a structured loan?
Depending, right? So it depends how they do. I mean, in Guam, if you're gonna make it concrete, like fully concrete, they're gonna dig in the dirt and they're gonna put a foundation that's gonna be structural, right? So what I tell you is get a building permit, right? Because if you don't get a building permit, and for whatever reason, um, it's not within the setbacks, or you're about a foot off or half a foot off, guess what? That thing's solid concrete, and you put that much money into it, you're not going to want to break it. But if the appraiser says, well, it's not within the setback requirements, then what are you going to do at that point, right? So I'm gonna, you know what? I have a refinance that I'm doing right now. Interesting story is they have their house, right? They refinanced it in 2021. and they took that money and enclosed the garage. Now, one of the appraisers was like, hey, because you enclosed the garage, you don't meet the setback requirements. Because if it's open air, right, like no walls, just a ceiling, no walls, okay? Or I'm going to say, okay, I'm going to double back. It's not a garage, it's a carport, okay? Open air, right? You can kind of, it's open air, but it's got a roof, concrete roof. They don't consider that in the setbacks. Once you enclose it, now you have an issue with setbacks because it's a full structure. Make
Wow.
sense? So one appraiser was like, well, no, you don't meet the setbacks because there was a portion. So imagine this is the wall straight, and then it kind of comes out like this for laundry, right?
Mhm.
But it was open and it was short. But because it was open, it was okay. Now that you enclosed it, they're now counting that from your for your 10 foot or 15-foot setback. Now you're short 3 feet. So they were able to get another appraiser that I don't know grandfathered it in, I guess. But again, so we don't know, when we assign appraisers, right? And it's different for every program, but it's all random, right? So you don't know who you're gonna get. And just because one appraiser might say it's okay, the other one might say it's not. So you want to be very, very, one thing that's always going to save you when you're doing any kind of structural stuff is a building permit. Because if you get a building permit and the government okays it, they can't go back and say, no, it's not okay. You know what I mean? Because you got a permit. Now, if you're doing a tin structure, I mean, yes, it still costs a lot, but it doesn't cost a lot as doing it in all concrete. And you can always say, all right, we'll just cut the tin and bring our garage in a little bit or outside kitchen in a little bit. You know what I mean? But at that point, it's it's fixable. But you can't cut the concrete and say, okay, we'll shorten the concrete, and now that's gonna just be one, it's gonna be a hazard, right? Cutting through that concrete and then all that stuff. So yeah, if you're looking to do something that's permanent, I would always say get a building permit, because the last thing you want is, one, if they won't appraise it because of the setbacks, you can't refinance. Two, you might not be able to sell it, because if nobody wants to finance it because of your setback issues, that cuts your buyers in half. You know what I mean? Or even 75%. Now you're only looking at cash investors who probably only give you 60 to 70% of the value because they want to try to make some money off of it. You know what I mean? So always get a building permit. If you're looking to do something permanent, get a building permit. You know what I mean? I know some contractors, oh, don't worry, we don't need it. Well, then make sure your measurements are exact, because if that contractor is gone, you're screwed. You know what I mean? And even if the contractor's still there, you're gonna be like, "Oh, sorry, my bad." Well, you already paid him. You know what I mean? Now you just decrease the value of your home. Um, the addition by subtraction or subtraction by addition. You know what I mean? Um, like sometimes, you would think adding a pool gives your house more value. Some places it gives it less value. You know what I mean? So aesthetically, it's nice, but some people some people don't want pools. They don't want the liability, right? You have to gate your pool in most states, and then you also have to get insurance, because if somebody jumps your fence and drowns in your pool, or if somebody drowns in your pool, you need insurance for that, right? So there everything, man, there's just so many scenarios, so many different things. You got to try to do it. I mean, I would say do it the right way the first time, so that you don't have any issues later on. And setback issues is a big thing on Guam. You know what I mean? And it's okay, we're gonna build and build and build and build, and then it's like, oh shoot, we can't sell it. Why not? You know what I mean? I had an aunt. They had a two-story house when they first built it. Next thing you know, it turned into a fourplex, but it was a R1 zone. which means single family residential. That means GPA is going to only give you one power meter, one water meter, two, and they did it and it was a lot of like, oh, let's do this, let's do that. So like they have a whole downstairs portion, okay, which the appraisers don't even give it value because it has a kitchen, a living room, and a dining room, right? But all the bedrooms, it's like a split level. So all the bedrooms are on the side of the cliff where there's no windows. So because there's no windows, they don't count it as a room. So it's like a 1,500 square foot studio.
Whoa.
Yeah. So they don't give them that additional value for bedrooms. Right. So there's a lot of things that and yes, it's a little bit more expensive, right? Because you're going through a contractor and you're getting permits and stuff like that. But guess what? That addition is going to give you value, not like it's not going to shoot you in the foot later. So she ended up moving off island and selling her house, which would have been worth about, so they appraised it, but it only appraised for like 500K. But because of all those issues, the setback, I mean not the setbacks, but the zoning and all of that stuff, she was only able to sell it for 300K to an
Wow.
investor because no bank will finance it. And if no bank will finance it, there goes all your buyers. There was actually a VA buyer that wanted to buy it and it was telling the bank, like, I don't care, I'll take it, because it was huge. It was like a complex in itself. But because it was 4 units on a single family, the appraiser was like, no, it's not best use or whatever. I forget. I don't remember the exact terminology, but she couldn't sell it for full price. Right. So, we gotta, I mean, there's laws for a reason. We gotta kind of follow them. Otherwise it'll kind of bite us. And growing up, I wasn't always the best rule follower, but nowadays I see like, okay, we got to do everything right. You know what I mean? Otherwise, they're gonna find you one way or another. You know what I mean? Karma's gonna bite you in the butt. Telling you.
I like it. I like it. Okay. We actually went over time, but that's
Uh oh.
that's
I'm
all
sorry.
right.
Well, you know what? Every time we talk, we go over time. Not that we're being
Well,
timed, right? But
see, the best thing I like about you is that you educated me. When I
yes.
was buying a house, that you sat down and you went over each question. You might not know the answer, but I thought I'll get back to you, and then you would come back with the answer, but explain it to me. Where
Yeah.
and not just say, well, this is what I want you to do. Push this, and
Yeah.
it helped
Well,
my
again,
process.
at the end of the day, Miss Ariel, when it's all said and done, it's you, your house, and your payment, right? And if I let you just do what you think was right or what's wrong or then I become a part of the problem and not part of the solution. You know what I mean? And the last thing I want is, Jose didn't tell me that. Like, no, I don't want that to be the case because again, this is not just I don't know if you saw in that picture, right? It says I speak mortgage, right?
Yep.
Mortgage is a different language. It's a different language, and it took me a long time, even as a loan officer, to understand that language. You know what I mean? And yes, there's things that we can do, we can't do. There's things that are a little bit off the rails, but again, at the end of the day, I believe in right and wrong, and sometimes when we do wrong, it's gonna come back to us. Like I told you, I said be careful with that TikTok stuff, be careful with that IG stuff, because those suckers don't got a license, right? Like there's people that, oh, look at how I bought all these
Yep.
houses with VA, right? Yeah, you could, but guess what? The VA is a primary residence program. So I could understand if you bought back in the day when houses were cheap, you were stationed in Florida, you bought there, then you went to Texas, and then you bought there, and you were stationed everywhere you were, and you bought a house because you could. I get that. But to tell people, oh yeah, I could buy 5 investment properties with VA, actually, you can't. You're not supposed to,
Right. I get it.
right?
There are
Because it has to be your primary residence, right? Now, you bought a house in Florida. Let's say you decide, you know what, Jose, I'm coming back to Pahrump, and you can afford to buy a house in Pahrump. You could absolutely do that, but you've already stayed in Florida for X amount of time, or you got a business opportunity there, or something. It's again situational, right? It's not just, oh, I'm gonna buy a house, one house in each of the tri-state area and have 3 houses. Well, if you work in Florida or you're stationed in Florida, why are you gonna buy a house in Virginia? Or what I mean? Unless your kids are in Virginia, then we could probably say that, but there has to be a reason. There can't just be, oh, I want to buy all these houses because I can.
okay. I have a question for you.
Okay.
You already used one of the loans. All right. You have a house. Now you want to buy another house. Can you use the
Okay.
USDA loan, even though you never used it the first time?
Can you use a USDA loan?
Okay.
It
You
is
already bought a house, but
uh
now you use the USDA loan. But can you use the USDA loan after you bought a house to buy another house?
it depends. Situational, right? So you could actually, let's say you bought a house a few years ago,
Mm-hmm.
or a condo, let's say. Okay. And then now you got a bunch of kids, and now you want to buy a house because you and the kids don't fit in a 2-bedroom condo. Okay.
Right.
So you're technically not a first time home buyer, but you've outgrown the house that you've lived in.
Right.
Okay. You could actually use a USDA loan to buy a house, as long as, one, your first house is not a USDA loan. So you can't have 2 USDA loans at a time,
Okay.
right? So you might have to refinance that into, like, if you're on USDA, you might have to either pay it off, sell it, or refinance it, and then buy the second house under USDA. Two, you have to be able to qualify for both.
Right.
Okay, meaning to be able to pay for both. Um, and three, there has to be a reason, like you've outgrown the house, or you need to downsize, or you need to, like same with VA, right? Like, so if you're in a particular area right now and you need to move to another area because of medical, or because of um like right now you're far away from everything, right?
Right.
Now in a year or two, you say, you know what, I need to be closer to my medical facilities, or I need to be, then we can use that situation as, okay, I used my VA once, but I need to use it again, and I'm gonna rent that sucker out. You know what I mean? There's always ways and means, but it has to make sense, right? It just can't be, oh well, you know what, I don't like that house anymore because it's blue, I want a yellow house next door. You know what I mean? It ain't shoes, it ain't cars. You know what I mean? Like my friend got a blue house with black rims, and now I want a blue house with black rims. Can't do that. You know what I mean? It has to be, especially when you're using programs like VA or USDA. Conventional, it's going to be occupancy, right? Um, if you need to be closer to work, if you need, now they have what's called a second home, which you can use that as a second home. But that means you can't rent out your first home, you know what I'm saying, or you can't rent out the second home. There's a lot of different things that are out there, a lot of guides, regs, and questions that we have to ask, because again, if we're not a part of the problem, I mean the solution, we're part of the problem, right? And if something's fishy, guess what? I'm part of the fishiness because I allowed it to go through, right? So, and I tell some realtors all the time, it's like, listen, one transaction isn't worth our license. Okay. Now, mortgage fraud is investigated by the FBI, right? It's a federal offense. Like, we don't want to go to jail because you wanted to buy 2 houses right next door to each other using 2 different government programs. and hope that nobody was going to find out. You know what I mean?
Right. So that, I mean, that's a question, we put out, but somebody asked, so I wanted to put
Oh
that.
no, yeah, I mean, and again, I like the questions because it helps me kind of brush up on things, and it also, like I said, education is my biggest thing, right? So I just started. I got a first time home buyer. I'm going to do my first time home buyer seminar here in Vegas in March 28th, and then I'm looking to do one in Sacramento, over where my brother's at, since I am licensed in California. So I'm gonna start doing a lot more education stuff. I'm working on getting a bigger office here in Nevada, so that or here in Vegas, so that I can hold more of these seminars. We do a lot of I did a lot of seminars when I first started in loan origination in Guam. I haven't done as many out here, so kind of getting my feet wet. Now I'm going to start doing more of those lunch and learn for the realtors, so they can understand. You know what I mean? I like my realtor partners to be just as educated as I am, because there's some transactions where the borrower feels more comfortable with the realtor. Like, I don't know if it's because I'm ugly or because I'm dark or because my beard. They're like, can you ask him this? Can you ask him that? But I mean, I try to be as open with all my customers as possible, and I try to be as nice as possible. But it's always a vibe thing. Sometimes they feel more comfortable asking the realtor, oh, so and so's asking this, oh, so and so's asking that. Okay, cool. Here's the answer. But then we'll recap after the after the transaction. I'm like, oh, so this and that, and they're like, man, I'm sorry if I'm asking questions. I'm like, no, because the next transaction, if that question pops up, you're confident enough to answer. Not that I want you to do my job, but we're on the same page, right? When your realtor and your lender are singing the same song and getting you through this process, it's just so much more beneficial for the buyer. You know what I mean? Versus, like, I mean, we had, one where I was kind of fighting with the realtor, like, no, this is not happening, right? It can't be like that. You know what I mean? Because ultimately, the way I see it, and I tell my realtor partners and I tell my borrowers, even if that realtor referred you to me, I have a fiduciary responsibility to you as my customer, right? I'm not going to sell you the house. And I tell them flat out, I cannot. I'm not licensed to do that. I'm licensed to give guidance on lending. I'm not licensed to say, yeah, but that pool is just so nice. You just got to buy it. Who cares if the toilet's backing up? That's not my job. You know what I mean? And if somebody's going to sell it like that, and hey, go ahead. If the buyer's willing to have a shitty toilet and a nice pool, cool. Not my decision, their decision, right? As a matter of fact, I was talking to an agent yesterday. She goes, Jose, you just tell them to use that insurance company since we already have it? I said, no. She goes, why not? I said, you know what? We gave them the quotes. They're waiting on another company. Let them do it, let them make that decision. Because if anything happens in 5-10 years and they're filing with insurance, they're gonna say, oh, that fucking Jose or this freaking what's your name made me pick this insurance company. let's I mean, not that I want to absolve myself, okay? Not at all. It's just everything needs to be the borrower's decision,
Right.
right? And when it's the borrower's decision and they're confident in that decision, then everything's more harmonious, even down the line, right? I will give you 50 quotes for insurance if you want it. I'll get all 50 and let you decide, because that's the power of choice that you have as the buyer, right? And I'm not going to take that away from any buyer, right? You have a choice on lender, you have a choice on realtor, you have a choice on insurance, everything. You know why? Because you're paying for all of it. I'm not paying for any of
Right.
it, right? So I think of it, and that's the way I look at it. I mean, you don't get to choose the appraiser, but there's reasons for that. Okay, there's reasons for that, and that's because of stuff that happened way back, right? Right, like nobody gets to choose the appraiser because we wanted to be random. We wanted to be just boom, you get what you got, right? And it sucks sometimes, and I'm starting to realize that here in the States, it's a lot different because there's a lot more appraisers, so and they're a lot faster. Yeah. But yeah, so that's that. It is what it is, right? But yeah, thank you for having me.
Oh, great. It's been a fantastic show. I don't know if you have something to do, but I have something off camera that I would like to ask you for myself only. And
Okay.
I don't want to put you on blast about Florida. So I'm gonna just leave it alone because he's only licensed in California and Nevada and Guam. He's not licensed here in Florida yet. Just so you
That's
know.
something for the future. I gotta slowly get there. You know what I mean? Uh, I built my business in Guam. I got a good portfolio there. Trying to work in Nevada, more so Nevada than California because that's where I live. I'm more about community. I'm all about community. Honestly, I only got my California license because I have a lot of family in California, and they're like, "Hey, are you licensed here? Are you licensed here?" And then it's funny because I get my license and then I don't hear from them. I'm like, "What the hell?" Okay, cool. But yeah, I'm gonna focus here, Nevada, get that going, get it rolling, and then um, so I do manage the branch in Nevada. So slowly, I'm gonna start to bring people aboard, and these people are gonna be like-minded. You know what I mean? Not my way or the highway, but there's a certain standard that we have, and one thing I like about Total Mortgage is we are 120% about the customer, right? It's all about customer satisfaction. Um, we are based out of Connecticut, and they are the top lender in Connecticut the last 7 years. All right. So we want to bring that to every state slowly but surely, right? Sometimes you don't want to get too big to where you forget where you came from. You know what I mean? But we're big enough right now. We don't have a big presence on the West Coast right now. We do have a big presence in the East Coast, mainly in the New England area. But we are slowly, venturing out. I mean, the farthest I think west they have is Guam, but or east, I guess, depending on which way you're looking at it, right?
Yep, yep.
Yeah. So, but we are slowly getting there, and we try to stay in that realm of we're still all about the customer. So when I tell people, I say, we're kind of a hybrid company, right? We have all the efficiencies of the big companies of everything's online and everything, all that, but you still get that 100% personal assistance that you need, right? You're not calling a 1-800 number to follow up on your application. You're not calling, you know what I'm saying? Like, it's funny because even on Guam, where Guam's so small, right? If you go to I don't even know if I can say it. Well, I'm gonna say it anyway. PenFed, right? The realtors have to call a 1-800 number to follow up on their customers' loans, right? It's like, wow, you're in Guam, 671, right? Why I gotta call 1-800 number, right? With me, you call my cell phone. You call my Guam cell phone, you call my Vegas cell phone, you call my cell phone. And you're gonna get to me directly, you know. I may mess around and say, please leave a message after the tone, but it's just me. You're gonna know it's me because it's my cell phone. But I do that to some realtors sometimes. They'll call me like 3 times, and I'm like in the middle of a conversation, and then they'll call again and I'll answer. Please leave a message after the tone. They're like, hello, Jose? Yeah, it's me. What's up? I was on a call, and I have one realtor say, it's real easy to say, hey, can I place you on hold? I got another call. I said, no, for me, that's rude. Like if I'm on a call, this person has my undivided attention, and especially when it comes to mortgages, because they need my undivided attention, right? And I may lose out on another loan, but at least I kept my customer happy, that my current customer. You know what I mean? It's I take it as it comes. You know what I mean? If this customer called first, then you're gonna have to wait until I'm done. I mean, it's the same way when you go to the teller, right? You go to the bank, you go to the teller, you wait till they say next, then they give you their undivided attention. you know, so we're kind of a hybrid in that sense, right? You have that personal attention, but with all the efficiencies of the big companies, right? You can get your pre-approval online, you can do all of that stuff, you can sign all your documents online. But you got a question, you call Jose's cell phone, not a 1-800 number. All right.
Alrighty, so we're going to say cha cha cha, moo moo moo. We'll say, oh, I forgot to say ha,
Half a
buddy.
day.
But
All
yeah,
right.
bye. So we'll be seeing you guys later, and you guys, I'm going to put his information up here for you want to get in contact with Jose. So if you're in Nevada, if you're in California, and you're in Guam, this is the person to reach out. This is a good lender. Now, personally, work with him for a very long time and is the best on education. And as you heard, that he will be doing educational classes in Nevada, and he's done them in Guam as well. So if you're a first-time home buyer or a buyer, or you know somebody that's out there in Nevada, reach out to him. His information is above. Contact him, and he'll be sure to get back to you as you said. And guys, if you like what you heard and you like what you see, I would like you to go and what do they say? Like and subscribe. So if you like and subscribe, we're happy you like that. So, and then if you like and subscribe, push the bell so you'll get notifications exactly when we will be on the show. I am Dr. D. I am from 963B4U channel on YouTube as well as Spotify. So if you don't see it here, you get to see it on Spotify or Podbean. And we're on Thread or Instagram. You'll find us many places, 963B4U. So I hope you enjoyed it as much as I did. And I want to send everyone blessings and nothing but love and affection. So we're back again. And I say toodles for now, everybody. So we're going out of here. We're bouncing.